Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, checking in on oil, starting with a pattern that I'm keeping an eye on. We saw the bearish break fairly recently. We've seen a nice bounce attempt, an oversold bounce attempt from then. There's certainly gains to be had to the upside, but in terms of the longer term outlook, breaking the higher low pattern has definitely shifted momentum. You can see back in 2016, we started a strong breakout and we had higher lows and higher highs into early 2017, and then we've topped out and now we're setting lower highs and lower lows. So that's definitely a shift in the trend and a shift in momentum, and we're watching now to see if that's going to continue to play out really for the rest of 2017. At this point, the bulls are going to have to set higher lows and higher highs. They're on their way to attempting it here next week, where we have our low, high of the bounce, higher low, and the bulls need to break this level of 47.29 in order to start to shift the trend. That being said, we still have a long downtrend line to be looking at, and then we have to get all the way up over really $51 in order to change this longer term downtrend. So at this point, we're just seeing if this oversold bounce is more than an oversold bounce, and if we do get that higher high, it will end up being more than an oversold bounce. The bulls will have a bit more power than anticipated after the clear bear break. But still, it's not going to change the trend back to favoring the bulls until we make some more significant moves. So looking at the weekly time frame to see it more condensed, let's not forget where we're coming from. We're in a very steep downtrend for the last 3 years, and we started to see that oversold bounce play out, and it was a solid bounce for 2016 into 2017. But again, you can see that we are losing that momentum. We topped out. We formed a baseline rejecting from $54 and $55. And now we're pulling back. So it is a shift in that momentum. This is a very key support down here. That's at 42.07. If that were to break, then we would see a very significant break of support that would have us looking down towards the lows. So 42.07, and we got down to 42.08. So that is a double bottom at this point, and that is notable. And I do believe that's why we're seeing this rally a bit stronger than, let's actually see here. It's 42.08. That low is actually down at 39.23. So I read the wrong level. I'm looking at the higher level of support that we did hold, and I'll zoom in here in just a moment. But you can see here, making sure no weekly candlesticks close below this level, we are bouncing a base of support right around 43.11. So you can see 1, 2, 3 bounces off this level, and it also looks like a potential bearish reversal head and shoulders pattern a bit. So we have to be keeping an eye on that. Not really clear cut, but if we break this neckline of support, this low $43 level, and if we close below that level, that will be a very significant bear break. So you can see where we are coming from. We could still see a bounce play out for another couple of weeks. If we form just another lower high, we'll be watching the support line. This is the support line to be watching for the rest of 2017 for oil. Checking in on USO, so we're trying to see that higher low and higher high, a bit closer to seeing that break. 963, we got up to 961, so we need that follow through to that higher high. And after 963, the next resistance level that we're going to be looking up at is 965 and 988. Moving average resistance, upper Bollinger Bands trying to ascend and get out of the way to clear some room for the bulls. But the weekly time frame, as we can see, is not doing anything to change this longer term trend. This is just a short term bounce as far as the bears are concerned, and anything under 1070 is going to be another lower high. So the bulls need more than 10% to even start to change this trend. As of right now, we are going to be anticipating another lower high to form, because that is what the trend has been ever since we started our bear break in early 2017. So a solid bounce, but anticipating it to be short-lived in terms of this weekly time frame. So I appreciate you watching. We'll continue to check back in on oil. All the commodities have taken a hit, where all the commodities had a really nice uptrend in 2016 and early 2017. And recently, natural gas, oil, and even some of the precious metals have broken their higher low pattern, and that has definitely shifted momentum and perspective. And all of this is occurring with a very weak dollar in 2017, and that is surprising as well. So if the dollar starts to see strength and starts to turn around its downtrend, I can only imagine that these commodities are going to see even further weakness and head back down towards some key support levels that were established on the bounce up in 2016. So pretty cautious in the commodity space here due to the weekly time frames and what's going on, and anticipating bounces to be short-lived. So I appreciate you watching. We'll check back in. Have a great weekend.